Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So that's kind of just a general look of really what's going on. I didn't hit everyone in too much detail, but I think you get an idea. The framework initially is a problem. The incentives created for the system to drive for the euro in and of themselves are a little bit dubious. And those incentives are starting to come apart, and especially when you layer on the tremendous exposure, we think the risks are growing, and there's a reason those yield spreads are starting to blow out among the sovereign debts. And as Steve said, we'll take the questions. And Steve, I'll let you go.
Thanks, Jack. Very, very interesting. There's been a lot of questions filtering in over the last 45 minutes, so I'll just take a couple moments here talking about options, and then we'll get back to heart of the matter, what's going on with the euro and where it could go. But you can trade this right through your broker. So if you have an equity options account, which I assume you do, and if you don't, you probably want to get one, you can trade this product right through it. So it's a dollar against the 6 major currencies, and it's very, very simple, very much like trading an index option, or if you've never traded an index option, it's very similar to trading an equity options. You have calls and puts. If you buy a call, as Jack likes to say, the beautiful thing about that is limited risk. If you buy a put, again, limited risk. If you buy a call, it means you think the U.S. dollar is going to rally, and if you buy a put, well, then you think the U.S. dollar is going to sell off. So those are just the basics of the ISE product. The underlier is the FX market. So if you take a look at the U.S. dollar divided by the euro, the U.S. dollar is the base currency. I know a lot of you are used to looking at the euro being the base currency, but in the ISE product, all of the 6 pairs, they all have one thing in common. It's the U.S. dollar as the base currency. So it's what is the dollar worth. So you can trade different strike prices. I'm going to give you some examples, but I looked at prices as of yesterday, and we had the EUI 75 strike call trading at $1.09 for the 3-month option, or the 6-month trading at $2.03 or $203. So it gives you the ability to control the U.S. dollar for that period of time. So if you're bullish, you'd be buying a call, and if you're bearish, excuse me, you'd be buying a put. So the options on the exchange rate itself, U.S. dollar base, 50-cent strike prices. The premium is quoted in U.S. dollars. It's European exercise. No need to worry about that. Just means that if you buy an option, you can't exercise it early. However, you can always trade out of this any time that the ISE is open. So 9:30 to 4:15 Eastern time, and you can close out of your position. They're cash settled, so you don't have to worry about having to end up in another currency. Noon settlement on that option Friday at the noon noon Federal Reserve Bank rate, the buying rate, and it's available in your conventional, brokerage account. We have market makers quoting, and the hours are 9:30 to 4:15. So I just wanted to show you how the conventions were built. 5 of the 6, we multiply that rate by 100. The one that you're probably very familiar with, the yen, it's just whatever it is. So dollar yen, it's whatever it was trading at 96. We trade options on that number. Dollar against the euro, we take that 0.70, we multiply it by 100 to come up with the $70 number. So we have 70, 71, 72s. Actually, we have them each every 50 cents. So it's very, very simple to understand. In fact, this is taken from the ISE website, and you could download that widget right to your desktop so you know where the 6 pairs are trading each day. So here's a chart. So you can chart these just like you chart your favorite underlying product. And as Jack was saying, obviously the dollar rallied during last year's debacle, the financial turmoil, and recently we've seen a sell-off. but you can get all this material, this information right at the ISE or at your broker, and you'll see that as of yesterday it closed at 70.61, and there's some other information there, the historical volatility and the implied volatility. But most importantly, it's where are we going to go? Are we going to be moving up? If you felt like we're going to be moving up, well, then what would you be doing? If you felt that Jack was right and that, you know what, the euro is overvalued, you'd want to be buying a call option. If you think that this trend is going to continue, you'd want to be buying a put option. So down would be puts. If you're buying a put. And if you believe that the U.S. dollar is going to rally, of course that means that the euro would sell off, that would be a call. I hope that's clear to everyone. There are lots of different strike prices, and the strike price selection is really based on your own goals and your own risk tolerances. So let me go through a couple of scenarios. Let's just say that we were bullish on the euro and we're looking at 3-month options. Which one is the best one to buy? Well, what I wanted to show you here is that there isn't any one best one. 70.61, the 69 call was trading at 3.46. The intrinsic value at the time was worth $1.61, right? 70.61 minus 69, or $1.61. All the other options had no intrinsic value. That does not mean that they're worthless. In fact, these options just require a bigger move, so you're actually buying more leverage. And the various scenarios, and this is really important to understand, is that at expiration, you know, all these calls would be worthless if we expire at 58 or 66. Well, all of these options would be worthless. So, of course, you'd be wrong if you bought any of these. However, if, let's say, Jack's right and the dollar is going to rally, well, these would all be very good trades looking out a couple months from now, right? Because this option, the 69 call, would be worth 5 at 74 or worth 13 at 82. So you'd have a tremendous rate of return here, from 346 up to 13, or even if you looked at the 78 call, paying 52 cents, this option that could conceivably be worth $4. And the 81 that's only trading at 28 cents, well, could be worth $1 if we rally up to 82 by expiration. So those are important things to consider. Now, what about more time? If you're interested in buying an option at more time, well, the same rules apply. You have this intrinsic value of $1.61. And then you just want to go through again, if we're wrong, if the dollar is not rallying, then all these trades would be bad. But if Jack was right, well, then these trades would turn out to be relatively good trades. Of course, you gave yourself some more time, another 3 months, which means a little less leverage, and in many cases, less leverage, unless you know you're going to be right, you're maybe better off using a little less leverage. So you notice that this trade, you bought this option for 5, well, if it only gets to 74, you break even. But if it gets to 82, well, you'd earn a nice profit. You look at this trade, the 75, if you pay 203, if it only gets to 74, you lose your entire premium. And that's all you can lose in any of these scenarios is your premium. However, if it does extend, let's go back to that chart. If it does extend up to sort of new highs up into this range, well, then the call options are obviously going to be great trades. Conversely, and I didn't do all the math here, that if the dollar continues to sell off, well, then just about all these put options will make sense depending on how far and how fast that the dollar sells off or the euro rally. So if we see the U.S. having even more trouble in the next couple months, next 6-9 months, well, the euro may even rally further. That's up to you, but there are puts out there also.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.